Gold or silver? Which should you own? Which one will truly protect your wealth? Sounds simple. But the real answer depends on a deeper question. Why are you buying it in the first place? Are you preparing for inflation? Hyperinflation? Or maybe even a full currency reset? Today, we're not just going to scratch the surface. We're going to explore the full story, past, present, and future. By the end of this video, you'll know what to own, why to own it, and how to think like the elites who are preparing behind closed doors. A brief history of money, gold and silver as currency. Let's rewind the clock. For centuries, humans have trusted gold and silver as money. Why? Because they are scarce, durable, and can't be printed out of thin air. Most people know about the gold standard. But until the late 1800s, the United States actually had a bimetallic standard. Both gold and silver were money. Silver was the money of the people, used for daily transactions. Gold was the money of the wealthy, used for saving and large purchases. The fixed silver to gold ratio was around 15 to 1. Today, it's over 80 to 1. That should already tell you something is off. But then came the Coinage Act of 1873, which effectively demonetized silver. That's when gold began to dominate as the single monetary anchor. Why? Because it was scarcer, more stable, and more trusted. Why silver became volatile, and why that's not necessarily a bad thing. Silver didn't disappear. It just changed roles. Roughly 50% of silver's demand today comes from industry, solar panels, electronics, medical devices, batteries. This industrial link makes silver prices more sensitive to economic cycles. When industry slows, silver drops. When it picks up, silver jumps. Yes, silver is volatile. But that also means silver has more upside potential. In a monetary collapse scenario, silver could spike due to dual demand, both monetary and industrial. Gold equals preservation, silver equals liquidity. Let's simplify their roles. Gold preserves wealth. Silver gives you liquidity. In a crisis, you're not going to shave a piece off your gold bar to buy bread. You'll use silver, coins, rounds, smaller units. But when the dust settles, gold gives you the buying power to acquire real assets, land, businesses, even entire companies. This is why in hyperinflationary scenarios, gold tends to outperform silver, not just in price, but in function. The gold to silver ratio, what it really means. Let's look at the gold to silver ratio again. Historically, 15 to 1. Today, approximately 80 to 1. During the 2020 panic, 120 to 1. This ratio tells us when one metal is undervalued versus the other. When the ratio is high, silver is cheap relative to gold. When the ratio drops, silver is catching up, usually during crises or bull runs. Smart investors use this ratio to trade between metals, increasing their total ounces over time. But this also reveals something deeper. Gold is more stable, but silver is more reactive. And that's not necessarily a bad thing, it's a tool. 1971, the year that changed everything. Let's talk about a major turning point, 1971. That's when President Nixon ended the gold standard. From that moment on, the dollar was no longer tied to gold. The US could print unlimited money. What followed? Inflation, stagflation, asset bubbles, and a permanent detachment from real value. Since 1971, gold has increased by over 4,000%. Silver? Over 1,500%. Meanwhile, the US dollar has lost 90% plus of its purchasing power. That's not a conspiracy. That's official data from the Federal Reserve. Case studies. What happens during hyperinflation? Let's go global. Here's what happened in Weimar Germany, 1920s. A loaf of bread went from 1 mark to 200 billion marks. Gold and silver retained value. Fiat collapsed. Zimbabwe, 2008, inflation reached 89.7 sextillion%. Gold bought you food. Fiat bought you nothing. Argentina, multiple waves, incomes destroyed. Gold and silver thrived in black markets. These aren't isolated events. They are blueprints. The more a government prints, the more fiat dies and metals rise. Central banks know what's coming. Ask yourself, what are central banks doing? They're not buying stocks. They're not buying Bitcoin. They're buying gold at record levels. Even countries that used to be dollar loyal, like China and India, are stockpiling gold. Why? Because gold is the ultimate Tier 1 asset. It has no counterparty risk. It requires no trust. And in a reset, it's the asset that resets the system. So if central banks are doing this, why aren't you? What about digital assets and gold-backed tokens? Let's look forward. We are entering a world of digital currencies, CBDCs, tokenized money, and blockchain-based finance. But here's the twist. Many of these digital currencies are being backed by gold. Why? Because people will only trust digital money if it's tied to something real. This opens up a new era: gold-backed stablecoins, tokenized silver, smart contracts backed by physical assets. So, yes, the future is digital. But ironically, it brings us back to gold and silver. Psychological factors. Why most people will miss the window. The biggest danger isn't inflation. It's normalcy bias. Most people believe, this can't happen here, but history says it can. And it does. When the crisis hits, it's too late. Banks close. ATMs limit withdrawals. Gold and silver disappear from the market overnight. Preparation is not about fear. It's about timing. So what should you do? Here's simplified answer. Own gold to protect long-term wealth. Own silver for everyday transactions in a crisis. Don't trade metals, accumulate them. Think like a central bank, not like a speculator. And remember, wealth isn't just about money. It's about what you can buy when others can't. Gold gives you that edge. Silver gives you that flexibility. Together, they give you resilience. The question isn't, should I own gold or silver? The real question is, how much time do I have left before I need them? If you found this video valuable, hit that like button. And if you're serious about protecting your wealth in uncertain times, subscribe to the channel. Stay sharp, stay free, and I'll see you in the next one.